Good evening, all of you. I'm just sharing my screen. Second, hope all of you can see my screen. So, good evening, all of you, and thanks for joining this webinar on SAP Production Accounting. It's a very interesting and very important topic. It's interesting because as cost accountant, many of us are cost accountants. We work on this side in our profession, and there are many CAs, MBAs. They also are very interesting on the controlling side of SAP. And at the same time, this particular area, it views into SAP each and every module. So whether it is FI, that is CO, MM, PP, SD, all this gets completely like it is at the confluence of all these modules. So that way it becomes very interesting to learn about this production accounting. And for me, it has been very, very interesting. So just a quick recap of about myself. I've got 25 plus years of career with me. Almost started working with renowned corporate or on SAP since 97. But between 91 to 96, I worked in Calcutta, and I worked with CA firm, started my career there working on audits, and then also joined an investment banking company, or what is called a merchant banker. So during this period, my interest in systems grew, and at the time, there were companies that were just trying to digitize their books of accounts. Most of them were like using FoxPro. None of us use FoxPro anymore, but FoxPro was widely prevalent to develop systems at that time. And I learned something on DBase and some little bit on some other technology, and it became really interesting for me. So I started working on areas which were like combination of finance and technology. And in 97, I joined General Motors, which was at that time Fortune #1 company. And my working there was a great experience in terms of the exposure that I got, not just to finance, but also to the organization, understanding how organization works. And then, of course, SAP, where they had implemented SAP R3 3.0F. That is a very old version of SAP, and that's where I started working. And it was very hands-on experience. There were no videos, no YouTubes, no webinars, and there were no classes, of course. And so it was just you go into SAP help menu, you dig out yourself, you sit on SAP, you execute transaction, and you learn from there. And that's what I've been doing all my career, very hands-on onto SAP. And also I love the finance side. So I'm FCMA fellow of the Institute of Cost and Management Accountants. I passed out CFA from ICFI. Then I did few certifications, CISA, CIA, PMP, registered valuer examination, and also did PGPX from UCLA, USA. So it has been an interesting journey. Currently, I work on valuation, where I work with many budding startups, and these are very young, very energetic people who are tech savvy, and using technology, they want to bring value. So that's a very interesting space. And the second is SAP, where I train many youngsters and also many experienced professionals. So who are passionate about technology, learning SAP. And SAP is the closer we can get to technology compared to others, whether it is a blockchain or RPA, or these are something which are still more technical for most of us. But SAP connects to our domain finance much closer compared to any other technology. So in this 25 plus years, I spent a lot of my time in domain side, general ledger, financial closing, So it gave me a very good insight into the financial side, and then the controlling side, product costing, profitability analysis, which gave me a good deep insight into the controlling. So, and along with many business processes, so that gave me a very good overall kind of an experience. I worked on a couple of implementations as a lead for the core group, as well as consultants and project manager, uh, working with Biocrop Science, uh, IBM, Colgate-Palmolive, General Mills. So that was an interesting journey. So what are we going to talk about today? Uh, so it will be on the plan to produce process. We'll try to see how much we can cover, because 1.5 hour typically, I spend 25 to 30 hours in the training that I conduct. But it will be really interesting. I will try to squeeze many things in this space, so you get a very good flavor of this whole process. There are so many components: plant, metal master, BOM, routing, work center, cost center. You have a planning cycles in SAP, then standard costing, configurations involving MMP, everything is involved. A lot of components get involved. Um, and so that's why it is not a straight jacket kind of thing. Even when you get the output, you will have to look at from many different perspectives and make sure that this is the right one that you are trying to achieve. So, and then we will also show an organization which will have an operating concern, where we do a profitability analysis, controlling area, where we do controlling for our cost to cost center accounting, product costing, and so controlling area, and then the company code, plant, storage locations, and the plan to produce process will have the purchase of material, consumption of material, the production order, confirmation of production order, final production of the finished goods or the semi-finished goods. Then you do month-end task of variance calculation, settlement, and all this related with our accounting. So how does SAP handle both sides? All this plan to produce process with FICO integration. Then, of course, the metal ledger we are going to look at. So there'll be a lot of things we are going to cover. Let me also quickly talk about this the SAP Skills program that I'm starting from tomorrow. So this is like a 40 hours program. It's focused on SAP design and implementation. How can we transform finance and integration with metals management, production planning, sales and distribution. The whole controlling module is covered extensively: costing, metal ledger, COPA, profit center accounting, SAP analytics. So, quick diagram, quick flow to talk about the various components. So, integration process, multiple regulations. How do we handle that? Planning, controlling, and product costing. Analyzing profitability by market segments like customer, product, and all that, and strategic business units. Your period and closing, understanding system design for growing enterprise. So how can we design? So this design for can you put on mute if you're not talking, so that others are not disturbed? Thanks. Okay, so I've been like very hands-on onto SAP. So this program I thought of for finance professionals is the practical hands-on. There's a small batch and there's more personalized attention compared to any other program that you go for, where there'll be 50 to 100 people in that batch. This will be very small batch. You'll have an access to S/4HANA in ECC for 3 months. Sessions are provided, the recordings are provided, and this is a 40-hour program spread over 6 to 7 weeks, 2 hours a session, usually in the evening, 7:30 p.m. to 9:30 p.m. Thursday, Friday, Saturday. And there are many participants who are working with some reputed corporates, and it has been a great value addition for them. Okay, and those who are in this webinar and who are registered, I'll offer training fees of 21,000 rupees, though I've increased it from 1st of August, but then it will still be 21,000 rupees for them. because many of you have shown interest, and so I will reciprocate it. I'll also provide the session recording to all of you, so you can also keep it with you. And of course, if you're interested, I can invite you to tomorrow's session for the 12th batch. So maybe you can let me know so I can send you the invite. Okay. So let us look at our organization that we are going to work with. So we'll have an operating concern. Operating concern is where you'll do the profitability analysis. So it's mostly, at different levels in the organization, you can define operating concern. Maybe we can do at the company code. Sometimes companies, they do at the region level, like an Asia Pacific region. So it depends on the purpose with which company would like to achieve the profitability analysis. Then the controlling area with below that. So we are going to follow corporate, like say Reliance, that is an Indian group, but it has operations in different countries of the world. And so they are working on many different currencies. They may have different, also how to handle different fiscal years or different chart of accounts and different regulatory requirements. So we are not going to cover that part, everything, but yeah, we are going to still follow a similar structure of a large organization so that we can look up some more scenarios within this plan to produce scenarios. And then we'll have a company code. This company code is based in USA. So the holding company is in India. Okay, and that's where the controlling area will be. So the currency, the group currency will be INR, and our so this is not group currency, it is a company code currency. Okay, so the company code currency will be US dollar, and the company 0010, which is in USA, has a plant in New York and also has a storage location in the plant where it stores material. And of course, you can have more company code to the same controlling area, or you can have more controlling area within the operating concern. They will all have some rules to be followed for the chart of account and the fiscal year variant. So for us, we are going to follow a IND chart of account, and fiscal year will be Jan to December. Okay, so plan to produce process in just a quick view. So we use a production order. So production order is like input, process, output kind of a box. So it has got inputs. Inputs are like, raw material, packing metal, semi-finished goods. So these are the metal which are issued for consumption onto the production order. And then you will have activities. So what are activities? Activity is nothing but the conversion. So you do activity, depending upon different industries. So you may have machine related activity, labor related activity. There can be many different activity the way company would like to define. And then there are all processes within the production order. And then finally you have output. It can be finished good or it can be semi-finished goods. Okay, and it is also possible to have multiple chains of product. So let's say product 1 is an input for product 2, product 2 is input for product 3, and product 3 is an input for product 4. And so finally you have got product 5. So it is also possible to build this kind of a chain. But in this class, we are going to look at a small example where product X is made using 3 raw materials. And then we are going to use some of the T codes for our purpose. So let me just get into SAP. So this is S/4HANA 2020 version. This is the version which we use for our training sessions.
Sir, one small question.
Yeah.
Sir, plan to produce, is it something different than make to order?
Plan to produce has make to order and make to stock scenarios, and there are many other different scenarios depending on the industry. But I'm going to focus on the make to stock side.
Okay, so this is the same make to stock, and plan to produce is the same philosophy.
No. Plan to produce is like an umbrella term, which will have many other scenarios.
Okay. Understood.
Okay, just for the beginners, we have got this is the end user side of the screen, and then we also have consulting side, or what is called SPRO, or the configuration. So we work on both the sides, configuration. We do configuration and we do the transactions as well. So let me show you some SAP tables also where we store SAP stores data. I'll show you one table which is very important for material side. So my valuation area is 0010. Valuation area and plant are similar. Okay. So 0010. So I got this 3 raw material, and this is the semi-finished goods. The total stock is 45, 46, and 1 unit has been produced for this. So this table gives you, I can also change the look and feel of this. This is much better. And the standard price is determined for the material. um, Many of you would already be aware about the price indicator in SAP, the standard cost or the variable cost or the moving average price. So different companies have different strategy. In this particular company and the plant that I am going to use, I am going to take all the material on standard. Okay, and I have my purpose of doing this because SAP also has actual costing, which happens downstream after the production processes are over in the month-end side. So when you have to do actual costing, SAP requires all the material to be on standard. So I've taken all of them on to the standard. This is my valuation class. 3000 is the raw material, 7900 is the semi-finished goods. So just a brief view of the plant and the product that I'm going to produce. Let me show you the standard cost. Okay, so this is my semi-finished good. Okay, so this is the standard cost that I have calculated already. So here I can switch between my controlling area currency and the company code currency. So it becomes INR, like I already said. My group currency is INR, and that's what I've taken it as a controlling area currency. So that's where I will do many of the group reporting in INR, and I can also do it. So this cost in INR is 281,000 per unit, and ideally, my company code currency is US dollar because, as I already said, this legal entity is in USA. Okay, so our scenario is how are we going to manage this kind of a company which is a subsidiary in USA and headquarters is in India. Now there's some issue here, so you'll see that US dollar is much higher than the rupee. That's a small problem. Don't worry about it. Some issues in the way data got configured. I did not have much time to fix it, but then we can still go ahead with it. So this costing, this product cost has got many components. So it has got bill of material. If I click on the bill of material, it shows me the raw material that will be needed to produce 1 unit of this semi-finished product. And then it has got routing. So routing, as you all know, defines the various operations that that takes place to produce a product. So I'm defining 3 operations that will happen on this product. And these are my work centers. So work centers are within the plant. So the plant is 0010, and within the plant there'll be work centers. Each work center may have different operations. So if you go to a factory, you'll see that different operations they happen in different areas of the factory. So for example, if a product needs to be cut, then there'll be area where it will be cut, then area where it will be cleaned. Okay, and then there'll be area where it will get melted. So these are nothing but different work centers where different operations are going on. So that's what are the 3 operations. And I got 3 different activities that are happening in each of these operations. Okay, so in this operation 1, I got activity to set up machines, then activity using machines, and then the labor activity. So for each of them, I've defined an hour. So okay, so this takes 4 hours, 5 hours, and 5 hours, and 2 hours, 3 hours. So this is just defined. Um, uh, so don't go with anything logical, but yeah, this is how you will also do in actual world. You'll have to just find out what is the right time for each of these activity for each of these operations. So this is what I've set up. So two things have been set up. One is the raw material needed to produce a semi-finished good, and second, uh, the operations or the conversion that will happen from raw material to finished goods. So those activities I have defined in routing. Sorry. And then there are dates like this costing is from 5th of August, uh, and the valuation date is also 5th of August. If I double click on this material, it will take me to the Metal Master. So Metal Master has got a lot of different views. These views uh, are actually used by different functions in the organization. For example, sales function. Okay. Similarly, the purchasing, the planning functions. Okay. And then there are work schedulings, and there are other storage location related views. Warehouses, quality management uses this view. And then finally, there are 4 views for us as finance professionals. And then the basic data is across, your client. So this will have the basic information about the finished product, and you can then extend it to any plant. So this material will be uh, unique for a plant. So every plant will have its own set of material. If you have one product that you're producing in 2 plant, then you'll have to create that finished good in both the plant. So this is how plant and material get related. Okay, and now coming to the accounting view. So this is the accounting view, and then you'll see that I have used the standard cost here as a price control. This is the finished product. So normally we take it as a standard cost in all the companies. Uh, and then accounting 2 will be where we can define other kind of standard prices like tax price or commercial price, which will be not used for legal valuation. This standard price will be used for legal valuation. So you see, I got 2 currencies in which I've done the valuation. One is the group currency. Of course, the value does not look logical. That's okay. Don't feel too worried about it. What is more important is that this material, I can see it in 3 different currencies. I've defined 2 currencies, but I can also have 3 different currencies in which I can see the value of my material. Okay, and then there's a metal ledger. So if I go to this tab, so here I can see more detail about the transactions for each of this material. This functionality wasn't there in the earlier versions. In ECC, in later on, SAP introduced metal ledger. In S4HANA, metal ledger is mandatory. So if you're implementing S4HANA, you will have this metal ledger implemented. So you see the receipts here shows the production order. Okay. And I also done settlement, which we are going to do later. And if I take a raw material, let's take. So in raw material, these are the receipts. These receipts happen from the production purchase order. So using purchase order, we have received the material and there's a price difference. Why there's a price difference? Because I've defined, like I already said, I've defined a standard price for raw material, which is at 250. If my purchase is higher or lower than this, then SAP will post a price difference. So this is what has happened. If you open this, you can go to the document. So here you see there are these 3 entries relating to one material purchase, raw material. Uh, so raw material 01 has been purchased, and for that the accounting entry is debit raw material credit GRR account, which is a liability account. So the moment goods are received, SAP will account for the liability. And then this is the difference between purchase standard price and the purchase order price. So this shows the efficiency or inefficiency of the purchasing department. So using this method, we are not transferring this inefficiency to the production. We are rather capturing the variance at the early stage, at the purchasing stage itself. So the material ledger can tell you what was your beginning inventory, the price differences, what are the receipts, what are the price differences, and then the consumption, and at what price the consumption have happened. Finally, when we do the actual costing, though we may not have time to do the actual costing, and also actual costing cannot happen mid month. It has to happen in the subsequent month. So when we do actual costing, this amount, the price difference, gets allocated to the consumption and to the inventory. So it gets split between these two. Okay, so this is how this price difference gets reflected. Okay, so this is the metal master, accounting 2 view, then costing 1 view. We'll have some settings that you will need for product costing, like with quantity structure. So I've ticked this because I want to use BOM and routing. And then the profit center. So each material will be linked to the profit center. So I'm using manufacturing as my profit center. And then this is the costing 2 view, where you will have the future price, current price, and the previous price. So at any point in time, you can have these three prices. This was the first time that I calculated standard cost for this material. So initially it was in this future price. And when I released it on today's date, then the future price became 0 and the current price became 18,1802195. Okay, and let's say if I want to do another release of the standard cost next month, and then that price will initially sit in the future price. When the release date comes, it will become the current price, and the current price will become the previous price. So this is how the transition happens in these three boxes. Okay, so this is the metal master. So we have looked at the BOM routing metal master. Okay, this is one very important configuration which monitors or controls the entire process of costing, where we have got different settings. Like on the costing type, we'll define whether it's a standard price or tax price or the commercial price. So this is mainly for the legal valuation purpose, and then valuation variant will define what kind of price you want to take, whether you want to take the planned price or the standard price or the moving average price for calculating the raw material price. Okay, so I've done all these settings. I have set up the BOM routing. I've set up the plant, company code related to the plant, um, and the costing variant. And so all this, and I executed the costing run and came to this price. Okay, so standard price is determined. Now, standard price has two important functions within SAP. The first function is that it is used to calculate the cost of finished goods when it is produced. So when it is produced, at that time, it will be evaluated at the standard cost at that point in time. The second is in the dispatch. So when you dispatch finished goods to your customer, at that time, the cost of goods gets debited and credit goes to the inventory account. So this debit and credit happens at the standard cost. So these are the two important the function within SAP for standard costing. Besides this, when you do a plant to plant transfer or you do any material related transfer, it always happens at the standard price or the price indicator that you set, whether it can be a variable cost or moving average price if you have done that. So depending on the price indicator, it will take the standard or the variable price for all the transactions. So that's the function of price indicator in evaluating the material in SAP. Okay, so we are ready with this. We have done purchases. So now what we will do is we will issue. We also have material in stock. So what we want to do is We want to create a production order first. With this. Okay, so we want to first create a production order. Our raw material is there. We already have raw material, and we want to produce finished goods using this order. Okay, so let me create a production order. So in SAP, you can create number of sessions and you can work on those multiple sessions, and it's very convenient. You can, if you need, you can say go and look at a standard cost or look at the tables or do the configuration and then keep doing the master data or transaction. So you can keep doing all this activity at the same time. So transaction code for creating a production load is CO01. My material is this. Before I get into this, while till this point in time, this system is working fine. There has not been any issue. I've tested it a few hours back completely. But again, remember, this is a test system. It is being used by hundreds of users in different parts of the country, and they may do certain change in configuration, which can also impact me. So we'll see if such issues come across, then how do I handle it? But let me just give this disclaimer at the outset so that you are not disappointed. So this is the order type, which is the configuration item. So now I'll say I want to produce one unit and my dates, start date and end date, and press enter. So this is the production order. And again, remember, all this is done by your production team members, not by any finance guys, unless that finance guy is posted into production department. But yeah, it will be very interesting to see how this works because it has got many finance implications. Okay, so some of the important parameters are here, like we have two costing variant and costing sheet. This is used for calculation of WIP, and then I'll put the variance key, which will be used for calculation of variances. And then this will have routing, which I showed to you in the costing sheet. So this is how your costing BOM and routing gets related with the production order. So one is the standard and which is plan, which happens at the beginning of the period. And now this is the actual transaction, which is also happening based on the routing and BOM, which we executed. So if I come to operations, it will show me the work centers and various operations. Come to components, it will show the raw material here. Okay. One important config here is called a backflush. So backflush means that if I have to issue raw material to the production floor, then there are two methods. One is that individually I will issue raw material. So raw material 01, I will, using a Migo, I will issue it to the production order. Similarly, 2, 3, 4. But what will happen if you have got thousands of material, like in a manufacturing of car, for example, even in many other products, you will have hundreds of material. How can you do so much manually? So SAP has this very nice functionality of backflush. When you use this functionality, your raw material, packing material get issued in one go. Okay, you don't have to issue one by one. You see this, I did not have to enter this material or the operations. It just got copied from routing and BOM, which I had created for the purpose of standard costing. So I don't have to put really much of effort. Even this gets copied from the Metal Master, but I did not do it because I wanted to tell you about this functionality. Okay, so you don't really have to do anything here if you just set it up or do the configuration right. So again, go back to the header. So we have these components and check the capacity. So capacity is available. We have a lot of capacity available, and the material availability check. So all check materials are in order. So what this check is doing is it goes into the BOM, and so it looks at the quantity of material that is needed for each of this material. Okay, and then it looks into the stock and see whether there's enough stock available for this purpose. So after done this, we will calculate the cost. So cost is determined. There's also a log here. in case if it gives you any error, you can come here and you can see most all of them are green except these three, and this is not something that is going to derail our work. So we can easily ignore. And in SAP, you've got these three signs. Green means uh, it is for information. Yellow means it is a warning. So you can still proceed forward, but you should analyze it. And red means it will stop, like this one. It will stop. So there is no error in the work that I have done. It is only some warning, and rest all are information. So it is all correct. Now I'll go to the cost and do an analysis. So it shows here that these are three raw material that we are using. 1 second, let me.
अच्छा है तो नीचे तू भी दे दो फिर मेरे को रखना है
Total actual cost quantity. Okay, so this shows the cost, raw material consumption. These are the activity cost, the total cost. Right now, this is zero because at the planning level, we don't have any variance. When we do the actual, then we will have this actual cost captured here. Okay, so we have seen the cost, and now I'll release this. Once I release, then this production order can be used for many downstream processes. So keep an eye on this status. Right now it shows release. Okay, earlier it was CRTD created. Okay, and when you come here to the operations, you see this also will change as we go forward. We'll do many different steps. So the status is something that we can keep an eye on. And so let me open on this screen and do CO11N. So CO11N is for the confirmation. So, second, I don't know, let's save this. Okay, so operation number 10, press enter. I'll say this final confirmation. Take the actual data. So you have this, for this particular operation, we'll require this much of activity hours. And if you come to goods movement, you'll see all the metals here. This is because of the backflush. Okay. So I need to put storage location here. If I need some other material, I can also add that material here. Or if I want to change the quantity, I can do, because this is the planned quantity. But in actual, I may need more or less quantity. So let me say I need actually 7 kilo, not 3 kilo of this material. Okay, so this is now ready for confirmation. Okay, so it says goods movement happened is 3 and failed is 0. So let us see what has happened in the production order. So I go to the production order. So you can put on mute if you are not asking any question. See, this status has now been added. It is PCNF, which is partially confirmed, because we have still not confirmed the complete order. Okay, so it is partially confirmed order, and the release status is still there. If you come to operations, it shows this is confirmed, and you go to the cost. Some cost has been booked. Sorry. This is, you see, higher than the plan, because plan was 3 kilo. I have actually consumed 7 kilo. So it will give rise to variance. Okay. And then I'm not, so there's some difference here. That is because there are some activity to be settled. Now let us look at the accounting aspect. Okay, so these two accounting entry have been passed. One is a document type WA. So double click on it. It shows there are 3 set of entries. Okay, so this is raw material 1 that is issued. When it is issued, the accounting entry is credit raw material and debit the raw material consumption account. And similarly, raw material 2 has been issued. And similarly, raw material 3 has also been issued. So SAP has passed an accounting entry automatically. So no need for accountants to do this job. Automatically, these entries have been passed. Debiting the and crediting the right kind of an account. The second entry is relating to the activity. So you see the account debited and credited are same. So in finance, it has 0 impact. But it is just for the purpose of integration that SAP has passed this entry, but the impact is 0, because the same amount is debited and credited in the same account. So this is relating to activity. So 2 accounting entries have been passed with that confirmation that we have done. And now we go to the material ledger and see what has happened in the material ledger. So there's CK M3 and T code that can be also used. So no movement has happened in this. It is a semi-finished goods. Movement has happened for sorry, raw material 01. Sorry. The consumption. So the good issue for order number 29. So 5 kilo has been issued. Okay, and this issue has happened at the standard cost. So 5 kilo multiplied by the standard price of 250 is 1250. Okay, so the metal has been issued at the standard price. So these are the various impact that I'm showing you for the confirmation. Now let us go to the second step of the confirmation. We'll confirm the second operation. Now in this operation, we don't have any goods. If you want to add, you can add it. It will appear as a variance. And let me also say like this is the 5 hour. Okay, so more number of hours are consumed, and we can save this. Actually, I want to do this again because I want to set it to final confirmation. So if you come back to this again, go to operations, and it shows confirmation. Here it is still PCNF because we still need to confirm the third one. And if you go to the cost, some of the activity costs have got added now. And if you go to the accounting entry, you'll see one more accounting entry coming here, which will be for the activity. Okay, so one more accounting entry, and this is for the activity again. Okay, so these are the impact for the second confirmation. Now we'll do the last confirmation, and then we'll see what is the impact on the production order. So this is 30. Final confirmation, actual data. You can save this. So we'll see what happens here. The status becomes CNF, like it is no more PCNF, it is confirmed. Can you go to operations and you'll see the third operation is also complete and it is confirmed. And you go to the cost analysis. So all the costs are booked except this one. This is not actually cost, it is a good receipt. We are yet to get the finished goods out. It is still in that production order box. So here the quantity was 11, we have consumed 13. And here there's some change in the activity that we have consumed more. So now we'll receive the material. So to do that, I'll go to Migo. And I'll have to select good receipt for order. Now here you can also do purchase order, and this order means it is a production order. Okay, so you have the item OK and do a check. Enter the storage location. the document is okay, and then you post. So metal document is posted. So now we come to display here, and metal document. Go to document info, see the FI document. So here the semi-finished goods stock account is debited because semi-finished stock account is what we had produced, and so it is debited. And the factory output production order means the cost of goods manufactured. So cost of goods manufactured is credited. Now you go to the stock, the production order. So this becomes DLV. This is the new status which is added, DLV. Come to operations, it is all confirmed. And when you go to cost, so this is also received, and this is the variance you have on the production order. Okay. And if you go to the accounting document, you will have one or two more accounting document generated. So this is the accounting document which has been generated, which we have seen for the debit to stock and credit to COGM account. And then this has happened at the standard cost. So let us look at the metal price analysis. So now we can see the semi-finished goods. This status you see, it is all related to the actual costing cycle. We are in the first stage of the cycle. So it has become green. When we execute further steps in the actual costing, it changes the color, and finally all this four becomes green when we have concluded the whole actual costing cycle. So you see the receipts here, you will see one more production order getting added, 29. Okay, and this 18029,195 is at the standard cost. So your ending inventory has gone up by 1 to become 2 kilo. And if you see one of the raw material, so we have done some production, and production order 29, 5 kilo has been issued for the production order. The stock will reduce by that much. So these are the all various impacts that have happened for the production order. So at the month end, you need to settle these variances. So within it, there are a couple of steps. Let me just open this presentation. So purchase of raw material is done, creation of production order is done, confirmation CO11N is done, canceling in confirmation. If I want to cancel the confirmation which I've done because say there was a mistake, then I can use CO13. And if there are some errors, then I can use COGI. We did not come across any error, fortunately. And then receipt of finished goods. So we have done till this stage. We have seen the impact of metal ledger and the financial accounting entries. Now we will have to look at the variance calculation, WIP, and order settlement. So this steps also involves T codes. So let us take first the WIP. So that is KKAX. There are certain rules within SAP. If your production order status If your production order status is CNF or DLV, then there will not be any WIP. Quite logical because everything is delivered. But if your production order is PCNF, it is partially confirmed, or PDLV, or partially delivered, or it is only released, then it will be considered for working in progress. In our case, there'll be no work in progress, but I just want to show you this step. So there's zero here because, of course, the production order is confirmed CNF and DLV status. So in progress has been considered. Go to the next step, which is for the variance calculations. So KKS1 or KKS2 /M KKS2. S1 is when I want to do it across the plant. But right now I don't want to do this because I just want to do a specific production order to demonstrate to you. So KKS2. So this variance calculation will only calculate variance and it will keep it in one side in a table. But it is not going to pass any accounting entry for this. Okay, so we don't have, if there was any error, then it would have shown here. So there is only information message. One order item processed. Okay, so just information. Okay, variance is 107,932.54. $107,932.54. So that's the variance which has been calculated. So I'll remove the test run and I will execute it. So no accounting entries have been generated for this. So go to the next step. Is the order settlement. Remember all these steps which are shown here in the settlement process takes place at the end of the month. Usually in the next month for the current period. There is a settlement rule which specifies that the variance for the variance, the sender is the production order and the receiver is this material. So it will receive 100% of the variance. That is what the settlement rule means. So I'm going to do a test run. It says settlement is executed and no errors. So the receiver will be material and sender will be this production order. But this is now 113,521.90. So this is because it is in the country CO area currency, which is why this amount is different. So let us go back. Test run. Okay, so the settlement is executed. So let us see the impact of the settlement in different areas. Let us first go to an accounting entry and check. So the accounting last is 2. So we'll see the new one that gets generated. So this is 7 that is now generated. So it has debited factory output production order, which is the COGM account, and debited the price difference on production, which means that this is where our standard cost was less than the actual. So and that is because we have actually used more material and more activity time. So our actual cost is higher, which is why it is debited to price difference account as an expense and credited to the COGM account. So this is the first impact. Second impact, let us go and check in the production order. The production order, this one. So this becomes 0 and 107,932 gets posted here. Okay. If you double click on it, it will go to the accounting entry. So if you see, there are 5 documents generated for this. One is the accounting document. This is the FI. Since I also have a profit center manufacturing, it has generated a document for the profit center. Then there's a controlling document for the controlling side, and then there's a profitability analysis document and the metal ledger document. So accounting document we have already seen. See this profitability analysis. So it goes to the COPA and the variable production cost. Don't worry about the text. This text can be changed to something else, but it will get captured here 107,932.54. So your income statement will have this variance appearing there. Metal ledger we are going to see. Okay, so yes, so the production order is updated. One new status has been generated. Because settlement rule created, variance calculated. So this all have been generated recently. There's one function of technically complete. You can, so once all the work on the order is done, the production guys will do a takeover, which is called technically complete. Because right now it is not in a change mode. If I use, then the status becomes takeover. So takeover means technically complete, which means that for all purpose, technical purpose, the work on this production is complete. Usually, it also sends a signal to the finance guys that this production order can be used for the purpose of variance calculation. So if you go to the here now, you see something new coming here. See the price difference is coming here now. So this semi-finished good cost is at the standard, and this one is the price difference, which is plus. So the total cost becomes this plus this of the semi-finished goods. When we do actual costing at a time, uh, depending on how much is in the stock, SAP will split it between stock and the consumption. Okay, so right now, in this case, there is nothing consumed. I mean, nothing has been sold or nothing has been taken consumed by the higher level process. So everything is in stock. So the total cost of the stock will become 3604 plus 571. So that becomes the actual cost. And there's a program that will do all this. It will take out the price amount from the price difference and put it onto the inventory and the consumption to get the actual costing. Okay, that's a separate process. So one thing which I have not shown you, let me also show that to you, is the procurement of material. Okay, because I got some time, I can show that to you. So let us create a purchase order. This is my supplier, purchase organization, purchasing group, company code. Just like I am buying just one raw material. Your quantity will be sale as say 25 at 400 rupees. Okay, 400. Enter the plant. So it is asking some questions here. Like first question was regarding this price. So if you go to the metal price master, the standard price is 250 rupees. Okay, but I'm purchasing it at 300 rupees. So I'm paying 50 rupees more. And which is why here it was giving me a message that there's a difference between these two prices. And it is asking me, can delivery date be met? Because no, I'm asking for delivery on the same date. So SAP is just asking a smart question. Some warnings, but tolerable. I'll say. Okay, the production order number is 45133. So I'll do again the Migo. Take the purchase order. And I'll receive this material. So right now I am the warehouse guy and I'm receiving this material in the warehouse. And select item OK. I'll do a check. So it is all OK and I'll post it. I'm not worried about what happens on the accounting side. Okay. So now I will check what has happened on the accounting side using this metal document info, FI document. Okay, you see the number of documents that have been generated, profitability analysis, metal ledger. So let us see the accounting document first. So remember there was 50 rupees of difference. And how much quantity did I order? 25, I guess, 25 into 1250. So that's the difference which is debited to PPV external account, which is purchase price variance account. GRR is at the standard price, sorry, at the PO price. So do 25 into 300. So this we are supposed to pay to the vendor. And the raw material was at the standard price 250 into 25. That makes it 6250. Okay, and the difference between these two is this one. If you go to the PA document, this has variance has gone into COPA for us to take into a profitability report. You come to the value field, you will see this is there in the report also. So using this profitability analysis, you can develop your income statement where you can do a contribution margin analysis. Okay, and let us go to the raw material. Okay, and let us refresh and see this receipt. This is the 25 kg which we received with a 1250 rupees of price difference. Okay, so now the stock is 65, consumption is 10 kilo. Okay, so the total variance, which is, I mean, the price difference is 3750, will get split between 10 kilo and 65 kilo at the end of the month when we do the actual costing. So, I mean, we have done all the process where we have purchased the material, we have issued it to production for consumption. Then we have received the finished goods. We have done various, we have done various confirmation on the production order. Then we received the finished goods, and we have done whole lot of analysis using finance documents, using metal ledger, using COPA, and the production order. So, any questions that you have, I'd be glad to answer. You can unmute and ask your question. Is this process clear to all of you? Like, it includes procure to pay and plan to produce. Of course, I have not done the payment side, but that's a simple step.
Sir, when we do the variance calculation and
Yeah.
the settlement, one variance is getting calculated, right?
Yeah.
And that will always go to the price difference account, right?
Yeah, correct. The price difference account, which I have configured in the configuration side.
Configuration.
Wherever I have
Now,
defined it, it will go to that account.
yeah, correct. And there will be the another variance which will be coming from the maybe from the purchases.
Correct.
Which will get settled in the ML run.
In the actual costing.
In the actual costing, rather
Yes.
instead of ML
Right.
run.
Right.
So, so you have demonstrated one example where the
Yes.
it will hit to the consumption as well and to the cost of goods sold also.
COGM, cost of goods manufactured.
Manufactured. Okay.
Yes.
So if so, in our case, the material or the FG was not sold. That's why it was not going to cost of goods sold, right? But
Correct.
if it is so, then it will go to that end, right?
Yeah. So what happens actually? I'll show you.
Yeah.
So
So the sorry. So the
Right.
whole link for this is the production order, right?
Yes.
Or the status of that production order.
Correct.
Okay.
Correct.
Okay.
So
Okay.
basically, what SAP has done with Material Ledger, it has combined all this component that I had shown you into the Material Ledger. So in the Material Ledger, you will get all the type of variances like production variances and purchase order variances. You'll get the receipts of the material. You'll get the consumption of raw material. You'll get the receipts of finished goods. You'll also get the consumption of finished goods and semi-finished goods. So everything gets captured here in this. Okay. Now, if you see, I'll show you how though we are not running the program for actual costing because that will not be possible. We are on
Time
the
will not
5th of
permit.
August and this is August transaction. So it will not allow, but let us do it, at least on the Excel file. So this is the standard cost of production and this is the receipt, right? Of course, there is some more complexity involved, like, because there is a raw material also, and then there is the activity price involved. But let me just take these two figure and show you how the actual costing will happen. Okay. So let us say there is only 2 kilo was produced. So out of that, 1 kilo is sold. Okay. And 1 kg is in inventory. Okay. So this is a positive variance, which means the cost goes up, and so the total cost for 2 unit is this much. Okay. So SAP knows that this is the 2 kilo, and so it has to So what will happen is this variance will actually get split. Let us first think what will happen if actual costing was not there. This variance that you see is treated as a period cost. Okay, so even though it is not lying in the inventory, so even though a part of it is lying in the inventory, then also the total cost, the total variance will be treated as a period cost, which means it is going to hit your P&L. So your P&L will have this item as an expense, 5,71,000. When we do actual costing, then 5,71,000 gets split into two parts. Okay, so basically this divided by 2. Okay, right now we have got 2 kilo, that it is more convenient for us. Okay, and the second one comes here. So this goes to the P&L because it has already been sold. Okay, or in other words, it has been consumed. So since it has been consumed, it is not a period cost. Okay, it is charged to the P&L. But this inventory, a part of this will come to the inventory, which is 285,568. Okay, and so the cost of inventory will go up. So what will the cost of inventory plus this? You divide it by 2. Okay, and then you add it. So this becomes the actual cost of the inventory.
So when we are saying here the actual cost of inventory will increase, does that mean the only the GL account balance or the MAP of that material will increase
Yeah, so
to that
there are
extent?
correct. So there are multiple steps within actual costing. Now there are multiple scenarios that can be handled in actual costing. Okay, so one scenario is that you don't do actual costing at all. So if you don't want to do actual costing, then there is a separate setting that you will do within the metal master. Okay, so I'll show you. See, here I have taken price determination 3. Okay, if I don't want to do actual costing, then I will select transaction base. Okay, then I'm not going to do the actual costing. Uh, or not even activating the actual costing. The second scenario is that I activate the actual costing. Okay, and I only calculate the difference. And I only calculate the actual cost, but I don't post it into the account. So it is like a kind of a report you are getting. Okay, and you are not doing anything with it except analyzing it. So that is the second part. So in that second part, your setting will be this 3. Then comes the third part where you will use actual costing for posting also. So when you post, it is also possible to post only the GL entry, or it is possible to also revalue your stock. So both the conditions are possible, both the situations are possible. If
So
you only pass the accounting entry, then your inventory value in only in the GL account. So your debit to the semi-finished goods will go up by this much, 285. Okay. So that will be a debit to your semi-finished good account. And that way, your at least in your GL account, your inventory and your cost will get reflected correctly. So that is the third option. The fourth option is that you revalue it. So which means that this cost will revalue the inventory. Okay. So if we are doing the so actual costing in the month of September for the month of August, then the actual cost will get released in the month of October. Okay, so from the 1st October, the your standard price will get replaced with the actual cost. So that is also possibility. But companies don't do that level. I haven't heard of companies doing this entire actual costing, but many companies do pass the accounting entry. But there are times
they are
when
not.
companies only do the analysis part. They don't do even the accounting entries.
So they are not going on MAP at till the MAP level.
Yeah, correct. So they will not then. Once you if you implement the actual costing, then there is no MAP. Everything is on standard. So once you select this as 3, then your raw material, packing material, and everything will be at S. Okay, so that's the kind of scenario I have taken for this demo, and which is why when I'm purchasing material, then SAP is seeing the difference between standard price and the purchase order price. It is passing a PPV entry. The PPV entry is happening just because of this setting, that I have taken my raw material at the standard price.
Yeah, thank you, sir.
Yeah.
Also, can you just mention the what is the standard report to see this PPV variance, purchase variance?
I I may not be able to find out in this server, okay, because I don't think all reports will be there.
It's okay, sir. I will
Okay.
Google it.
Yeah. So, or I can even tell you later on, I'll to just find out. Okay. But definitely it is possible. You see, once you take out any purchasing report, you will have those things available. Even in your GL account, you will have it. Even in because GL account has both the sides, variance also the purchasing.
And it must be with the separate document type as well.
Yes, correct. Even you can get it from the AC docket table. So any one of you who are working on this process, are you doing actual costing or only limiting yourself to the standard costing? Any one of you are working in the production environment?
I was working.
So your company is doing actual costing?
So basically, there were two organizations. So in one organization, what we were doing, the FG was on V.
Okay.
And what we have done there, we have made one customization which work like an similar pattern with the actualization, I would say, not to the raw material level, but at least to the FG level. Means if it is delivered, then price difference to that extent, it will push to the price difference. And if it is in inventory, then it will inventorize. And there the another in the another organization there was a ML run as well, but the actualization was not to that extent. Means yeah.
So anyone else? Anyone wants to share experience? Anyone who has experience of any other system would like to share how the actual cost, this kind of processes are handled in other systems? You can unmute and answer. Let it be a bit interactive. We have still 5 minutes to go. So we can share our knowledge in these 5 minutes. Okay, so looks like there are no more questions. But yeah, it was my pleasure to share my knowledge with all of you in this area, and I hope this has benefited all of you. Thanks a lot to all of you for participating in this webinar. I will keep conducting this webinar and again send you information about it, and you can join this. And yeah, of course, if you are interested in continuing on this SAP journey, want to enhance your skills in SAP, do reach out to me, and we can discuss about the skills development program. Okay. Thanks a lot, all of you.
Sir, one just small question,
Yeah,
not
yeah,
related to
sure.
the today's topic. When you introduce yourself, you said after your the domain knowledge, you have shifted to this. So just a small question on that. What was
Yeah.
your age when you taken that decision?
Um, so let me just recall. So I moved
Yeah,
into SAP when I joined. So you mean when I moved into consulting?
yeah. Or when you have changed your domain and you go into the SAP configuration and all.
Okay. So actually there was a transition happening. Like in biocrop science, I managed SAP as a core team lead, and I worked on part of the configuration. Then I was also managing the end user side. So that was a transitionary phase. But then after that, I joined Colgate in 2005. Um, so I can say I was like 34.
Okay, yeah.
Yeah.
Thank you, sir.
Okay.
Hello, sir. Hello, sir.
Yeah.
You have like shared your experience in detail, and this seminar will definitely help us in our day-to-day and the future all the activities. Thanks for
Yes.
like sharing this your knowledge in detail
Yes.
and very simple with the very simple examples. Thank you
Thanks a
very much,
lot,
sir.
Umesh. Thanks. Okay.
Thanks, sir.
Good night. Yes.
Good night.
Further, sir,
Yes.
my request you to if you can take this type of session only on the material ledger activity, or
Hmm.
maximum all the SAP users, almost I think 70 to 80% of the companies which are using SAP, they are
Right.
moving towards the S4HANA also.
Correct.
And S4HANA is the additional benefit is the we can have a variance calculation over there. Then the material ledger as a compulsory
Yes.
portion.
Correct.
If you
Correct. It's
compare the
mandatory now.
ECC. Yes. So that also will help in future.
Yeah. Actually, I
Yes.
did one complete metal ledger session a few months back, and I think the video is there on my website also, so you can have a look at it. But I
Yes, sir.
like this kind of topics. I was planning to have one more session which got cancelled, and maybe I'll plan it next time, which was around the new ledger and new ledger currency type, the accounting principles, the fiscal year, and how does it then relate with the controlling. So SAP is now tightly building the bridges between FI and CO, and especially with the new ledger coming in, the currency type is becoming very important. There is a currency type defined in metal ledger, which is what I've used today. I've used a group currency and the company code currency. So I defined it in the metal ledger. I've defined it in the new ledger. So both the sides have defined the currency types. And the new ledger functionality is now extending to the controlling now. So you can have one of the non-leading ledger also linked to your controlling version. So that is also possible. So there are a lot of these possibilities happening. So, but then I'll see when I can organize that uh, program again, and I'll inform all of you about it. It will be also a very interesting area.
Yes, sir. Thank you,
Yeah.
sir.
Okay. Good. Thanks all of you for being a patient participants and asking good questions. So enjoy uh, whatever time is there in the evening. Thanks for all your time and enjoy the weekend. We will catch up soon. Bye.
Yeah,
Good
Thank
night.
you,
thank you,
sir.
sir.
Have a
Good
nice
Thank
night,
you,
all
evening.
sir.
of you.
Thanks
Thank you.
for
Sir,
your
can
time
you
as well. Thank
can
you.
you share presentation with us?
Yes, I'll share the presentation and also this recording.
Okay,
Yeah.
thank you, sir.
Okay.
Thanks a
Thank
lot.
you.
Thank you very
Thanks.
much,
Bye.
sir. Thank you.
If you're registered in that portal,
Yeah,
then your name address will be there with me, so I'll share it.
yeah, yeah. Okay,
Yeah.
thank you, sir.
Thanks.
Okay,
Bye.
thank you, sir.
Bye.